Let's take one final look at our market before we have a Christmas break from our weekly updates. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, December 12th. We know that selling or buying a home can be stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Let's start off by looking at how the market performed this week. There are 25 homes on the market, up a little bit from last week's 21. And surprisingly, the average asking price is the same. We do round up to the closest 1,000, but still, the average was almost identical this week compared to last week. There were the same number of pending homes this week compared to last week, but the good news is the average asking price for those pending sales jumped up significantly to $2,249,000, up nearly $1 million from the average last week. And 9 homes sold this week. Obviously, we had no closings last week. And the average asking price for this week's closings was just under $2 million at 1.9. All right, so now we know how the market performed this past week, and now we can look at the broader trends that I just previewed there for a second. That'll help us know how the market will end out this year. Before we look at those trends, if you find this information helpful, you can subscribe so you don't miss out on future updates. And while you're at it, why not share this information with a friend? Everyone deserves to be in the know about their local real estate market. Okay, so let's talk about those broader indicators. Inventory rebounded a little bit this week after several weeks of continued reduction. So we had been trending down, but bounced back up a tiny bit. It's back up by 4 homes, which isn't a huge shock since the past 3 weeks we only had 1 to 2 new homes on the market per week, as sellers were mostly trying to avoid being new to the market right around Thanksgiving. Now that we are a few weeks past Thanksgiving, we have 5 new homes on the market this week. And with inventory jumping back up this week and pending sales not really keeping pace, the turnover rate had a significant fall off. That 100% mark that we hit last week was very short-lived, and we're now down to just over the 50% mark, unfortunately. While the real-time indicators are a little softer this week, the lagging indicators improved significantly. The over-under number is back to almost break-even. There's the break-even line. We're so close. Just 0.3% below the asking price on average, less than 0.5% below the average asking price. As inventory continues to drop, this trend has the potential to improve even more as we close out the year. After falling to below 1.8 million last week, I forgot to adjust this line here, but here we were just below 1.8 last week. We are now back to over 1.85 million for the 30-day rolling average, sitting right where I expect us to level out for the rest of the year. I had mentioned I thought we would end right around 1.85 by the end of the year, and it looks like we'll hit that. The Triple Q had a minor reduction in value to close the week out. It had been pretty flat. This is a 3-month average, but the week had been flat just to fall off by about 1% on Friday to close out the week. Even so, it's still up nearly 20%. Like I said, this is a 3% number, but here we are way down here. We're up over, I thought I had the percentage indicator. Anyway, we're up over 20% year to date for this fund, which, really helps buyer portfolios and their ability to afford. So moving into next year, people are still able to afford homes. It's just a matter of interest rates and inventory that we'll have to wait for. Speaking of interest rates, the Fed cut the discount rate by 25 basis points this week. But that expected cut was already factored into how the mortgage rates had been falling a little over the past month or so. So they had been trailing off, and then the Fed rate didn't really help us this week. Mortgage rates actually jumped back up 3 basis points instead, even though the Fed did cut the discount rate. There isn't usually much to talk about in our market between Thanksgiving and New Year's. This week is kind of the epitome of that idea. Inventory bounced back up a little after the market took a couple of weeks off for Thanksgiving, but the prices and the over-under numbers improved in spite of that. Moving forward, I expect the market to maintain its sluggish turnover rate as fewer and fewer buyers are looking to make any big moves during the holidays, and the lack of inventory doesn't give them a lot of options, even if they did want to make that move. We're going to take the rest of the month off from our weekly updates and be back in January to look forward to the 2026 market. Thanks for joining me for this final update of 2025. I hope it helped you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the bell so that you can be ready to attack the new year with us. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We are here to help guide you every step of the way. Have a Merry Christmas and a Happy Holidays, and we'll see you next year with a new update.